Welcome to InvestorHubX.com. Today, we're diving into one of the most powerful tools in a crypto investor's toolkit. And no, it's not a crystal ball, but honestly, it's pretty close. We're talking about logarithmic regression, specifically the Bitcoin rainbow log regression band chart you're looking at right now. And if this chart looks like a rainbow threw up on a price graph, good. That means you're exactly where you need to be. Because once you understand this, you'll start seeing the market very differently. In this video, we're going to cover 4 things. First, what logarithmic regression actually is. Second, how to read the Bitcoin rainbow band. Third, why this metric matters more than most people think. And finally, how to actually use it to make better decisions in the crypto market. Let's begin. First things first, what exactly is logarithmic regression? In simple terms, it's a mathematical model that fits a curve to Bitcoin's historical price data. But here's the key difference. Instead of using a normal scale, we use a logarithmic scale. Why does that matter? Because Bitcoin doesn't grow in a straight line. It doesn't go up by the same dollar amount each year. It grows exponentially, meaning each cycle is larger in percentage terms, but smaller relative to where it started. A logarithmic scale compresses that explosive growth, so we can actually see the underlying pattern. And when you plot Bitcoin's price history this way, all the way back to 2011, something interesting happens. A surprisingly consistent channel begins to emerge, and that is what you're looking at here, a regression band that Bitcoin has respected for over a decade. And no, that's not a coincidence. This is the unsee rainbow logarithmic regression band, and each color band represents a different valuation zone. Think of it like a temperature gauge for Bitcoin's price. The blue and green bands at the bottom, that's your basically on sale territory. Historically, accumulating Bitcoin here has been a generational opportunity. Think 2015, late 2018, mid 2022. The yellow and orange bands in the middle, this is the fair value zone. Bitcoin is priced reasonably relative to its historical trend, neither cheap nor expensive. The red bands at the top, that's the danger zone. Overheated, euphoria. This is where the 2017 and late 2021 peaks happened. If you're buying up here, you're likely buying someone else's exit. So why should you care about this as an investor? Because most people buy Bitcoin based on feelings, hype, fear, headlines. This chart gives you a data-driven framework to zoom out and ask, where are we in the cycle? It doesn't predict the exact price. No tool does, but it tells you whether Bitcoin is historically cheap, fair, or expensive relative to its long-term trend. Notice how every single cycle, 2013, 2017, 2021, Bitcoin ran into those red bands and came crashing back down. And every single bear market bottomed somewhere in the blue and green. The model isn't perfect. Bitcoin could break the trend, adoption could accelerate it, or a major crisis could break it. But for 14 years, this regression has held. That's not nothing. So practically, how do you use this? Think of it as a long-term compass, not a short-term trading signal. Here's a simple approach. Blue or purple zone, consider accumulating. Scale in slowly. Yellow zone, hold, keep your position, stay patient. Orange/red zone, consider taking some profits. Don't get greedy. This isn't financial advice, but it is historical context. And in crypto, context is everything. Pair this with other metrics, like the Fear and Greed Index on-chain data or the halving cycle, and you've got a much clearer picture than 99% of retail investors. If you find this helpful, please visit InvestorHubX.com for more lessons just like this. We're building a complete learning platform designed to help investors like you master technical analysis, stocks, cryptocurrency, commodity, precious metals, property investing, and more, step by step. You'll also get access to custom indicators and in-depth video courses to support your learning journey and take your skills to the next level. To summarize, in this lesson, we explored how logarithmic regression helps us understand Bitcoin's long-term price behavior. By switching to a logarithmic scale, we compress this exponential growth and reveal a much clearer structure. This structure allows us to identify potential market tops, spot market bottoms, understand where price sits within the broader cycle. However, it's important to remember, this is not a prediction tool, it's a framework for understanding market behavior. If you found this video helpful, please give it a thumbs up, subscribe to the channel, and turn on the notification bell so you don't miss any future videos. I'll see you in the next lesson.